Good evening. So, my name is Zanka, and in today's webinar, I want to show you how to develop automated trading strategies using StrategyQuant platform. At first, please confirm that you can hear me. Just write something to the chat window, which you should see on your screen, and we can start. Okay, great. Confirmed, you can hear me. So, today's outline is very simple. At first, I will tell you something, some theory. Yeah, because we should start with some theory, but only for, let's say, 10 minutes. And I will show you two methods of development, random method and genetic method. Both of them are in the StrategyQuant platform, so we can use both of them. And each method is better for, let's say, different users. Then I will show you, I will tell you something regarding data for strategy generation and backtest. And we will move to the practice, where I show you how to import the data and how to develop strategies in StrategyQuant. So, regarding the strategy development. First method of development is the random method. And the random method is very simple. It's the most simple method of strategy development where everything is done randomly. Just imagine that you have a pool of building blocks, let's say like oscillators, moving averages, and so on. And you have some entry rules, some exit rules, and simply big pool of building blocks. And by random method of strategy development, you randomly take some part of the strategy and create the strategies. But of course, not every strategy which is randomly created is profitable. In the other hand, StrategyQuant can produce and test thousands and thousands of strategies every hour. For example, I have a very strong computer, but my computer can test about 60 million of strategies every day. So it's very quick, and in this big pool of strategies, in these, let's say, hundreds, thousands, and millions of strategies, you will find some profitable and some very good strategies. So this random method is very simple, but there is not improvement, there is not any optimization. So this is just, let's say, if you find some strategy, it's just coincidence. But if we move to genetic method, this method is more advanced because this method automatically improves strategies, automatically optimize strategies, and simply finding the best profitable strategies with the best results and best equities. In the first, when you use this method, the first let's say pack of strategies is created randomly. But from these randomly generated strategies, StrategyQuant creates new strategies and find a way how to improve their results. So in the beginning, we have some very simple strategy with, let's say, average results, and in the end, you have optimized strategy with very good results and very stable equity. Of course, everything is not just about finding the best equity and with a huge profit without any drawdown. It is also about robustness, and we discussed robustness last week. Today I will show you how to develop strategies, and in the next lesson, next week, we will show you how to test the robustness of the strategy. So now we can move to the data, because the data are very important for strategy generation and for backtest. We need high quality data for reliable backtests. It is very simple, because if we have bad data, we have unreliable backtests and also unreliable strategies, and it's a big problem. Therefore, we have created a platform Tick Downloader, where you can download high quality data for many pairs. And today I will show you the platform and show you how to download and prepare the data for your strategy development. It is very simple. You will see it. So let's move to Tick Downloader. This is the Tick Downloader platform where you can download the data. You can see that there are some parts. First part is majors, the most common parts of the market. Then there are crosses, metals like gold and silver, and exotic pairs, and also some commodities and indices. I recommend you to start with EUR/USD because it is not so difficult to find high quality and profitable strategies on the EUR/USD market. Therefore, I recommend you to use this one. You can download the data from the year 2003 to 2017 to the last day. So it is for almost 14 years, and it's a long enough history. From my experience, it's very important to have a long history of data, because if you imagine, let's say, the history of the last 10 years, we had financial crisis in 2008, where the markets were very unstable and had very high volatility. Then we had a growing period with impact of QE, of quantitative easing. Therefore, it's very easy to test strategy on long data, because each strategy must survive all these periods of market. The high volatility during the financial crisis, the growing during, let's say, the growing part of the growing season on the market. And in this platform, you can download the data since 2003. But of course, it's really a big amount of data, so you need enough time, yeah, to download it. I recommend you to download whole history, but let it run over the night, because it can take, it depends on your internet connection, but it can take a few hours. Just to show you how it works, I will change the download period for this year, for just 26 days, to show you how it works. If you want to change the period of the data, just double click on the period and replace it from the 1st January 2017. Click OK, and I can click to start download. And Tick Downloader is currently downloading the data, and it should take just a few seconds. It's very quick. You can see that each day takes just a few seconds. So it's finished, completed, and now we have to export the data. Export the data to CSV file, which we can import into StrategyQuant platform. Simply at first, click on Configure, which you can see here. And at first, you should set the time zone. And time zone of RoboForex is UTC +2. So select the time zone. And also, I recommend you to take 1 minute data, because Tick Downloader can download and export tick data. And tick data is a really huge file, let's say about 10 gigabytes for EUR/USD. So I recommend you to use 1 minute data, because the file with 1 minute data is much smaller. It is, let's say, about 200 megabytes, and it's enough quality for most of the strategies. So take the 1 minute data, click on set time zone, of course, and click OK. Then just click on export data, and in a few seconds it will be finished. On your computer it can take, let's say, about 1 hour, yeah, for the whole history from the year 2003 to 2017. So let it run when you are not sitting at the computer, because it takes, let's say, 1 hour. Now we are exporting the data. Wait a minute. So it's finished. It takes only 37 seconds. And now we can import data into the StrategyQuant platform. So I will switch my screen to StrategyQuant platform. And here you can see RoboForex StrategyQuant. If you want to import the data, you must go to the part Data Manager. One very important point: if you don't speak English, you can change the language of StrategyQuant, and it's very simple. At first, click on View, View Language, and you can select from these languages: Chinese, Czech, Deutsch, English, French, Italian, and Polish. I will left it in English because this is English webinar. If you want to import the data, at first you need to add symbol. When you install the StrategyQuant into your computer, there are some data, but just from 2007 to 2014. I recommend you to simply delete all this data. Just click on the first, touch Shift button on your keyboard, click on the last one, and touch this button, delete symbol and data. And everything is deleted, and now you can import the data for the longer historical period. At first, I have to add symbol, so click on Add Symbol, right, EURUSD M1, like 1 minute. Point value in USD, this is very important. This value will be for EURUSD $100,000. Because StrategyQuant can build strategies also for stocks and so on. So the point value doesn't mean move of 1 point in Forex. So it's for EURUSD the 4th digit. But it means when, let's say, EURUSD moves from 1.25 to 2.25. And this one whole point is $100,000. Piptic steps is the smallest Piptic unit. It's on 5 digits, and Piptic size is on 4 digits. Tick data are from MetaTrader, so they represent start of the bar. And default spread, I recommend you to use a bigger spread than you expect. So let's say 3 pips is enough for EURUSD. Click OK, and you have a new symbol in your computer. And now we can import the data. So click on the button Import, and in this dialog, simply choose Data File. Here are my tick data, and I will select EURUSD 1 minute. Click Open, and StrategyQuant automatically recognizes the format of the data. So I just simply click on Start Import, and in very short time, usually about 1-2 minutes, data will be imported to your StrategyQuant platform, and then we can move to build strategies and start with the strategy generation process. So just wait short time. At first, it will check the data file if everything is correct, if there are not any mistakes. Then StrategyQuant import the data, so convert the file, because the files are in zip file to take a smaller space on your computer, on your hard disk. And then I compute the daily time frame, and it's very quick. So it's finished in 45 seconds, and now we have EURUSD 1 minute, and for 5,000 days for the period from the year 2013 to this day, to 26th January of 2017. And now we can move to the second part. To the build strategies, and I will show you how to build strategies. Here you can switch between genetic evolution and random generation. Now I would like to tell you which method is better? From my experience, if you want to build strategies, let's say for a daily time frame for indices like S&P 500 or Dow Jones, then it's better to use random generation. Or if you have a very strong computer, you can also use random generation. Strong computer, I mean like, let's say at least i7. Yeah, so Pentium i7 is a very strong computer. You can use random generation. If your computer is not so strong, you should use genetic evolution, because genetic evolution is quicker. You will find the strategies much quickly. So I will use genetic evolution to show you all the settings, and in this part I would like to show you also one important thing, and it's settings of your computer power. So click on Tools and Options, and here in Performance you can set how many threads you want to use in strategy development. I have a very strong computer. It's a server with 2 computers and 56 cores. But don't be afraid, you don't need so strong computer. From my experience, for the genetic evolution, it's enough to have, let's say, 2 or 4 threads. It's enough to build high-quality strategies. So I will here you can select how much threads you want to use in the development. So I will select them, click OK. And when you set the genetic evolution or random generation, it's up to you. Then you can move to settings. In settings, you have to select at first the data. So our USD 1 minute, which we import, and time frame period. I recommend you to use at least M15, 15 minutes, because frankly I don't like scalping strategies. I prefer strategies on hourly time frame, where each trade has about 12 or 24 hours. And the reason is very simple. These strategies are much more stable in real trading. M15, 15 minutes time frame is very good. Hourly time frame is also very good. I will show you the development process on hourly time frame. Under the settings, we set the date. So we will start from the date, from the beginning of the data, let's say, from 5th May of 2003, and any date, please set to the year 2015, because last 2 years we will left for another robustness tests, which I will show you in our next presentation, in our next webinar. So start date will be from 2003, and end date will be to 2015. And in this part, you will set the out of sample period. Out of sample means that on this blue part, it's in sample. This part is called in sample, and it's also here. It's from the year 2003 to 2011. So in this part, at this 8 years, we will just develop the strategy. We will improve the strategy and so on. And on out of sample data, on the last 4 years, we just run the strategy and check how the strategy behave out of the optimization period. So it's necessary to use out of sample period, and I recommend you to use at least 30% from the whole data. So I set, let's say, about 30%, and this is everything regarding the data settings. And then I need to set the test parameters. As I said before, spread is better to use wider than you expect. So if your average spread is, let's say, about 2 pips, I recommend to use 3 pips. You have a bit bigger spreads, you have worse backtest, and it's usually always better. And then you need to set test precision. There are a few methods of precision, and the most precise but the slowest is real tick. If you import the real tick data, you can develop the strategy on real tick data quality. It means that in your historical backtest, you have each move of the market from the last, let's say, 12 years or 14 years. It's very precise, but it's very slow. You can use tick simulation. I never use this method. Or you can use 1 minute data. I recommend you to use 1 minute data because it has enough big quality in compare with real tick testing. It's very similar, and on hourly strategies it's almost the same. So 1 minute data is enough, and the faster method is select time frame only, but these backtests are unreliable, or trade on bar open. Trade on bar open means that you trade only on the open price of the market. This method is good, but only for daily time frame. I don't use it on hourly time frame. So I will select the 1 minute data and move to the another part. And another part is strategy options. In this part you can set if you want strategy, let's say, only for long or only for short, because if you want to build strategies, let's say, for indices like S&P 500, it makes sense to trade only long side, so tick this option, only long strategies. But for Forex, I think that better is to trade just both sides, because in indices you have big edge on the long side, but in Forex I think not. In trading logic, first what you should take is replace pending orders. It's, from my point of view, it's very important to take this option, because what does it mean? It's simply described here. If it's true, the existing pending order is replaced with the new one when trade is a new signal. So it makes sense. If we have a new signal from the market, we replace the previous order. So please tick this one. It's very important from my experience. You can also limit signals to time range. So it means that your strategies are traded only from, let's say, 8 o'clock in the morning to 4 o'clock in the evening. And you can exit at the end of time range. You can exit at end of day, so at the midnight, or you can exit on Friday. If you can use this one, you can, it's up to you. But for hourly time frame, I prefer to let it run for a whole day. And the last part of strategy options is stop loss and profit target option. You should have every time ticked stop loss is required, because it's very important to use stop losses. If you don't use stop losses, you can lose simply everything. But so therefore I recommend you to use stop loss. So every time tick stop loss is required, and it means that each strategy will include stop loss. You can also tick profit target is required. It's up to you, because this is not so extremely important. If you will not have profit target in your strategy, you can have different exit, which I will show you in building blocks. Then you can select the minimum and maximum stop loss profit target in pips. And the minimum 30 and maximum 300 is good, I think. So I will left it. Stop loss profit target based on. It means on which method you want to have based your stop loss or profit target. You can use ATR. It means that the stop loss and profit target is based on volatility. So if the market is more volatile, has bigger moves, then you have bigger stop loss. And if the volatility is lower, so if you have lower moves, the stop loss is also smaller. So stop loss based on volatility is not bad, but you can also use fixed pips. So you can take both of them, and it will be selected by the genetic evolution. ATR multiple just left from 0.5 to 5. from my experience, is the best combination. And you can also limit risk-reward ratio to some range. But I don't recommend to use this one for genetic evolution, because it works only for random generation. Because in genetic evolution we can't use it, because in genetic evolution we improve the strategies automatically, so we can't limit the results to let's say some benches. Yeah, so it's this is good to use only for random generation. Next part, as I said, is building blocks, where you select which building blocks you want to use. In first part, you select the indicators and entry rules and also exit rules building blocks. You can select between price values, price ranges. Price ranges are usually indicators of volatility, like ATR. Operators are to compare some values. So let's say, for example, ATR is lower than some number. Then you have a big range of indicators, some hours, minutes, day of weeks, some time conditions, and also candle patterns. And the last section are simpler rules. Simpler rules are simply MACD above or below 0, RSI, relative strength index, below or above 50, and so on. Just a very simple rules. In the beginning, I recommend you to tick all these building blocks. And next part are order types and exit building blocks. You can select which method you want to use. For example, our USD market is the best for the breakout strategies. So the best is to select only the stop, enter at stop, and of course select stop loss, profit target. You can also use profit trailing, exit after X bars, move stop loss to break even, stop trailing, and exit rules. If you don't use profit target, then your strategy will have a different exit method, like profit trailing, exit after X bars, or exit rule. But I recommend you to use profit target, because from my experience, strategies with profit target has better results in real trading. Next part is genetic options. Genetic options is, let's say, a bit more difficult for settings, but I recommend you to set just one thing in this part, and it is the last one. Start again when finished. So it means when one evolution is finished, then automatically starts the new one, because the evolution can be finished in a few minutes if you have a strong computer. And also restart if fitness stagnates for 10 generations. It means if the quality of the strategy from the generation is not growing, if the strategies are not better and better, then you start the new evolution of strategy development. So this is very good. And in this case, if you start the StrategyQuant, it will generate strategies, let's say, for 1 year. Yeah, it never stops. It generates strategies. You have to touch the button stop and then test the robustness of the strategy. Next part is money management. Money management is very simple. You can select between a fixed size. It means that each trade has 0.1 lot. Fixed amount. It means that you risk $500 for each trade. And the last option is risk in percentage of account. But I don't recommend you to use this one, because we need statistics from fixed size or fixed amount to select, let's say, the most stable strategies. Therefore, I recommend you to use this one, and I prefer fixed amount, because, for example, if your stop loss is based on volatility, on ATR, Then if you use fixed size, then each stop loss will have a different size. Let's say one time is your stop loss 30 pips and another time is 80. So your risk of the trade can be a few times bigger than in different trade. If you use fixed amount, it means that it doesn't matter if your stop loss has 20 or 50 pips. Each stop loss is $500. So this is a better method to measure the quality of the strategy and to measure the risks. Next part is robustness testing. I don't use robustness testing between building of the strategies. So we'll skip this one. And one of the most important parts from my point of view and from my experience is the ranking options. At first, you should set the maximum strategies to store in databank, and it means that you will have at maximum, in this case, 500 strategies in your databank. I recommend you to use bigger value, let's say 2000. And then you have to set the conditions of, let's say, good strategy, because in the strategy development process you will find many strategies, and many of them, let's say 90% of them, will have a low quality. Therefore, it's very important to test quality of the strategies before the robustness testing, and the strategy must have some, let's say, stable historical results before we test how is the strategy robust and if the strategy can be profitable in the future. So I will show you how I recommend to set the ranking options. Of course, important is to have net profit, so the strategy must be profitable. But also it's very important number of trades, where I recommend to use at least 200 for in sample, and number of trades for out of sample, it should be half of this value, so let's say 100. So each strategy will have at least 300 trades. 200 plus 100. Then very important statistic is return drawdown ratio. Return drawdown ratio is very simple. It means that the strategy made profit, let's say 10,000, and the maximum drawdown was 1,000. In this case, the return drawdown is 10, and it means that for each dollar of risk, I earned 10 times more. And from my experience, it's very important to measure the return drawdown ratio. It's one of the most important indicators. So it should be bigger than, let's say, 0.5 for each year of the history. So if we have in the data 8 years in sample, this value should be at least 4. And the same for out of sample. Return drawdown ratio for out of sample. And here again half of the previous value. So it should be at least 2. So take this one. And the last one is percentage of wins. Percentage of wins. And from my experience, it should be at least 30%. Breakout strategies are usually has much bigger profits than stop losses, but they also have smaller percentage of winning trades. So average breakout strategy has about 40% winning rate from my experience. Therefore, I want at least 30%. Because sometimes you can find a strategy which has only, let's say, 10 on 15% of profitable trades. But it's just a noise. Yeah, you just take the noise in the market. It's not real edge. So 30% is the minimum, I think. When you set the settings of the strategy development, you can simply come back to progress and click on Start. Then the StrategyQuant will start to generate the strategies, and I recommend you to let it run over the night because it needs some time to develop the strategies. And when you reach 1,500 strategies, and you can find it here in rows, when you see 1,500 strategies, just simply click on Stop. Then you stop the generation, and then you can test the robustness of the strategy. But robustness will be in the second part, in the second webinar next week. So for this week it's everything, and I will show you also what you can see in the results. I will stop the generation, and this is some random strategy with not so good historical results, but I want to show you only the results, what you can see in the history. At first, you can see overview with very important statistics regarding the trades and strategy. This is very important, and I think that we will describe it in different lesson because this is a very important theme and it needs some time. Then you can see, of course, list of trades, all trades which were made by the strategy, and also the equity chart. This equity chart is not so nice, but it's just the beginning. Then trade analysis, where you can see profit loss in money by year, by hour, let's say, by weekday, and so on. Also robustness analysis, but we don't use robustness testing, so there is nothing. Strategy settings, this is not important for us, but what is most important is source code. In source code, you can simply see how the strategy what the strategy trade. So for example, this strategy using shooting star candle pattern as a long entry condition, and when there is a shooting star candle pattern, then the strategy place stop order on open 7 candles back plus some deviation based on volatility. Stop loss is based on volatility also because there is ATR, and move stop loss to break even is 85 pips. So it means when we reach the profit 85 pips, the stop loss is moved to the entry level. And we have also stop trailing, so our stop loss is moved to pivot level on each bar close. So we exit on trailing stop, and also there is exit order. So if we have open long position and in the market is piercing line candle pattern, we exit the position. Now it's not important if the strategy makes sense because the equity is not so nice. But you can see what the strategy trade. So it's not, let's say, black box. Yeah, it's not some black box where just as input is the data feed, and output are trades. You exactly know what your strategy is doing, and this is very important, I think. But in next lesson, we will discuss how to test robustness of the strategy. If you don't have StrategyQuant platform, you can contact RoboForex company and request StrategyQuant for you. And now I think that there is a time to answer your questions. I can see there are some questions from Mr. Patrick. Patrick, if you want to import the data, like let's say Dow Jones to StrategyQuant platform, and if you download them from Tick Downloader, it's almost the same as our USD data. Yeah, it's very simple. If you have any questions, please write to chat. I will wait for any other questions. Yeah, Patrick is typing something. If you will have any problem with importing of the data, you can contact me on email, zanka@strategyquant.com, and it will be my pleasure to help you. It's true. Give me 1 second, please. I will show you where you can find the table of the values. So one minute, please. So on this page, strategyquant.com/pages/strategyquant data setting, you can find a table with point setting for the most common pairs, and there is also description of the strategy import, and you can also see the values for gold, for DAX, and for oil. If you miss any value, write me an email and I will send you the correct values. It's not a problem. Yeah. Patrick, when I see your questions, I think that it will be better to take, let's say, a private Skype session. If you have Skype, please add me on your Skype. My Skype is denek.fx, and we will discuss it on a private session. I can prepare a time, let's say 1 hour for you, and we can discuss everything deeply. Yeah, it's much convenient, I think, than here, because it's, let's say, for a longer time. Yeah. Okay, so yeah. Okay, Patrick, I'm looking forward to our session. So thank you for attending to our webinar. I wish you nice evening and see you next week.